Welcome to Creekside Chats with Successful Real Estate Investors, brought to you by Steve Talker Capital, promoting prosperity and harmony to help you flourish in all areas of life. Join in as we explore the motivations and goals of real estate investors and how their ability to invest abundantly has provided them with the time and freedom to contribute to the world in a creative and thoughtful way. Now please welcome your host, Dr. Allen.
Enlightened investors, Dr. Allen here with Mark Willis, a man on a mission to help us think outside the box about money and our future. He co-hosts the Not Your Average Financial podcast. Today he shares with us a powerful strategy for investing in real estate through tax-free income. Welcome, Mark.
Tell us about how it is that you turned your student debt into a wealth-producing vehicle.
Okay, sure. It has in a large part to do with the same story I hear millions of others participating in this country. The student loan debt mountain continues to accumulate and grow, surpassing credit card debt.
$3 trillion or something
Massive,
like that. Yeah.
Unfathomable amount of money. Yes. The trouble was, we graduated in 2008. My wife and I, with 3 private school degrees between us and no jobs in the middle of the Great Recession, no plan to pay off our 6 figures of student loan debt. It was scary. Honestly, it kept us on edge for several years. And all we were sort of told by traditional retirement or financial planners was to pay down the debt and hope and pray that we don't have any emergencies along the way. And then you could begin your saving, investing for your future. That was
when you're 65.
Yeah, exactly. Yeah. In fact, that was sort of the plan we followed for a number of years. And we lived on beans and rice. And then on Fridays, Alan, we'd go crazy and live on rice and beans just to mix things up. We had lots of fun in the midst of it. It was humble livings, but we literally were throwing money into a hole, and we never saw that money ever again. About halfway through our project of paying that debt down, we started to, and some mentors helped us think this through, but we started to think about the issue or the problem of just paying off our debts directly. So it was in the midst of that sort of reflection point that we began to really ask, well, could we find a way to actually build wealth alongside our debt payoff strategy? And how could we even use the debt as an opportunity to create true wealth that didn't have anything to do with Wall Street and didn't have anything to do with banks, credit cards, finance companies, student loan companies? And that's really where our journey in our financial firm was born.
Well, tell us a little bit about how it is that you came to be who you are today. If you can think back to a childhood experience that, as you look back on it, you go, yeah, that kind of was a formative experience for who I am today.
Alan, as a professional, we all have multiple lenses we can see our past with. And the memories that we take to our present day help inform who we are and who we're becoming. Right. I believe that anyway. And so we can find bad memories, shameful memories, traumatic memories, and that'll inform our view of any relationship we have today, for example. Mm-hmm. I'll share a quick one. This is sort of semi-funny and semi-true, but I have a very distinct memory of saving my allowance and my work money, so to speak, things like mowing the grass and everything. When you're very young, you just keep it anywhere you can keep it. And my parents just said, just put your money in this little paper bag here. So I did. I had literally a paper bag that kept all of my coins, quarters, nickels, dollar bill here and there. And I accumulated about $50 in that. And I was probably 5, 6, whatever years old. And at some point, my mom took me aside and said, Mark, it's time to go to the bank and put this into a savings account at the local bank. 50 was the minimum deposit. So you've got it. Let's take it to the bank. I honestly, Alan, was a little nervous about giving all of my real cash, my coins and green stuff, over to this stranger who I'd never met and hand this banker all of my money. what was he going to do with it? And once I gave it to him, was he going to just take it and go run away, right? Little did I know how truthful that fear was.
That was.
So that is one of my formative memories, that we can sometimes rely on a banking system that has not always our best interest at heart. In fact, taking our money and running is about what banks are good at. I actually read the other day that up until 2020, in this coronavirus, banks, FDIC insured banks in this country, have only a portion of our deposits on reserve. I don't know if anyone's ever heard of that, Alan, if you've ever researched this, but there's a phrase.
It's less than 10%, isn't it?
Yeah, you've got it exactly right. Yeah. So I've got $1,000 when I log into my bank account, but maybe $100 is really on their books. Every $900 of my money is someone in somebody else's pocket as a loan, right? And what's so interesting about this, and then I'll hush, but what's so interesting about this is when I ask for a loan, let's say, Alan, you go in and you deposit $1,000 at the bank, and then I walk in behind you in line and get a loan. Where's that money coming from? Well, it's not the bank's money, it's Alan's money, right? And they'll loan me as much as $900. What do I do with that $900? I put it right back into a bank account before I spend it. So what do they do with that deposit? They loan it to the guy behind me in line, and on it goes. They can inflate that money supply 10, 15, 18 times before it's really totally eviscerated.
Right.
And the last piece to this is that just floors me, and it relates
back
to
infinite. I don't think they can eviscerate it. Isn't that right?
Yeah. This year it can be infinite. Yes, as of 2020, and the coronavirus allowed this. There's no more, as of this year, no more reserve requirement at all. Not 10%, not 2%, 0% of our deposits are left on the books. That to me is, I would rather a paper bag. So anyway, that's maybe a diatribe there, but that's a story from my childhood and a first taste of the financial system that we're all caught up in.
Yes, and it's extraordinarily predatory, and particularly student loans. I mean, people, originally student loans were intended to help students, and then about the 2000s, things changed dramatically, and they became very, 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 very predatory loans, and they are the most predatory loans on the books these days. So talk to us a little bit about that process that you went through to find a better way.
Sure. Yeah. The problem that we were faced with was no interest in a savings account. The stock market was still fresh off the 2008 crash, so we didn't really see the stock market as a permanent and predictable pathway to profits and prosperity. And our student loan debt was like a mortgage payment that we didn't ask for. I kind of joke and say that my wife and I married, fell in love in college, but then I accidentally also met another woman in college. Her name was Sally Mae, and she wanted monthly cash. So we found
she wanted alimony and child support.
Yeah, exactly. Exactly. And there was the only guaranteed return in our portfolio was to all of our debt. And that was a big wake-up call for us. And I started to realize that even just paying cash for our debt was not the answer, because every dollar that we would throw at our student loans was a dollar I'd never see ever again, or whatever that $1 might have grown to over my lifetime. Now, we were in our mid-20s at the time, Alan, and the power of compound growth is most impressive when you're
youngest, 5 years old,
right? Yeah, when you're 5 years old, yeah. So the interesting thing here is we started to dig into what sort of strategies we might come across that would help us get real wealth even as we were paying off our debt. And for my wife and I, it was scary. It was we had a lot of intense moments where we were trying to play the balance between future and past.
Mhm.
You know, we were caught in the moment between our debt and our future goals. And, you know, it was around that time, again, a former professor of ours came to visit us here in Chicago, where we are, and sat down in our living room and started just asking us some of the similar questions that you're asking, some of the heart questions, not just money, not just financial vehicles, products. Hey, do you have a 401k? None of that was important to him. He wanted to know, is where your money is living today bringing you the kind of life that you want to have? Is it adding to the insanity or to the sanity of your life? And at that time, I was working for a CPA who worked with tax returns mostly, but there was some investments as well that she would deal with. And she was making those phone calls, Alan, to people in the midst of the 2008 and 9 and 10, calling these clients saying, I'm sorry, Mr. 64-year-old, but you're about to retire and I just accidentally lost you half your life savings in the
Mm.
market. That to me was like a house of cards tumbling down. I was wanting to be in finance. I thought it was a great career to be in. Lives could be changed, transformed. And yet it was like being dropped into the front lines of a war that I didn't really know whose side I was on at that point. The Wall Street casino had wrought havoc on real clients. I wanted to prepare for the future, but didn't know where. And so a mentor of ours kind of brought us some strategies that opened my eyes to not only preparing for the future, but also adequately dealing with the past at the same time. So I'm thinking about the question you asked, and you know, I'd be happy to get into it some, but that's kind of the mindset we were at when we kind of started digging into finding real solutions to our problem.
Mhm. Yeah, well, you know, there are millions of young people who are facing that very same thing, and you know, massive amounts of debt with no end in sight, which adds to um, mega amounts of depression, which adds to their inability to actually see the way out or to even look for solutions. And it just compounds and it compounds, and it's not only devastating to our student population um, who are our leaders and are the way forward for our country, supposedly, and yet we are piling on top of them this enormous burden. You can call it debt slavery, whatever you want to call it, but it's demoralizing, it's dehumanizing, and it's a terrible way for our country to be treating our best and our brightest who should be out there leading our country. And the United States is the only country doing that to its students, by the way. So, so yes, tell us what was the so this mentor came. Did this mentor just happen to drop in on you, or I mean, how did that
Yeah.
connection come about there?
He was a former professor of ours, and I had gone through school outside of finance in a totally different career track. So, like so many, we get into things after college that may or may not have anything to do with our degree.
Mm-hmm.
But he was just a good friend. We had
Mm-hmm.
spent lots of time with him outside of the classroom. My wife and I became family friends with his wife, his kids, everything. And he was just in Chicago area and wanted to spend a few days with us. So among other conversations we had with him, you know, good friend, good guy. I respected him a lot. He had nothing else to gain from the conversation except just to share an idea that he had found. And
Mm-hmm.
so he sat down with us and said, Mark, I have some important things I want to talk to you about related to your student loans
Mm-hmm.
and banking on yourself. And that phrase intrigued me enough that I was willing to sit down for about an hour to hear him describe some of these strategies I'll mention here. But it absolutely changed my financial life. That
Mm-hmm.
conversation was like a fork in the road for our financial lives, my wife and I. Here's kind of what he explained to me. It's a way to think and act and be like a banker for all of the big purchases you have in your life.
Mm-hmm.
Your cars, your vacations, your real estate investments, your debt, including your student loan debt. All of it is running through somebody else's bank. On the average, according to U.S. Commerce Bureau, Alan, the average American spends about 37 cents on their dollar servicing debt. Now we all have, yeah, isn't that nuts?
Yeah,
now we all have very, yeah.
I suspect it's really more than that. That just seems a very conservative number to me.
That's the average, right? So that means other people might be more, others less. But the key there is, even with low interest rates.
Do you know what the mean is?
I don't have that info, but that'd be helpful.
I'll bet the mean's a whole lot different than that average there. Yeah.
Yeah, averages can sometimes mean nothing because, yeah, you're right. Some people may be way higher, some lower. The mean would help us there. But, if we just take the average on face value and we look at time as money, if time is money, what's a third of our day? We're essentially, to your word, slaves to a bank for a third of our day. And if we throw taxes in to the mix, we might even be working for someone other than ourselves for at least half of our day or more, depending on our tax bracket. So it's in the conversation, it wasn't so much interest rates that were the problem, it was the volume of debt that my wife and I were carrying and we expected we'd carry with mortgages. And you look at some of our clients, they're fighting their way out of this problem where you've got a mortgage and you've got a second home and you've got 2 car payments, you got some old student loan debt, you got credit cards. The interest rates aren't the problem, it's the volume. It's a lot like going to the doctor, Alan. When you walk into a doctor's office and they give you a vaccine, this COVID-19 vaccine we're all hoping for, it's not going to be the rate that saves our lives, it's the approximate volume into our arm. If we don't get enough into the shot, right, it's not going to be helpful for us. If we get 10 gallons of the vaccine in our body, it'll kill us, right? So you want to keep an eye on your debt volume. And that's where too many Americans, 37% of our income, going to these low interest debts. But anyway, we found our way in the conversation, talking through a strategy that would help us fire our banker, fire our student loan company, and buy back our debt and become our own source of financing. Here's how it worked in principle. It was a old-fashioned life insurance policy, whole life insurance in particular, that develops and grows in a very efficient way as a source of capital in our lifetime. So most people think about life insurance as this is the money I'll leave my estate someday. But the way he was talking about this type of whole life insurance, he called it a bank on yourself type policy, allowed for lots more cash to be accumulated in the cash value, the living benefit side of the policy. So as that policy builds up cash and builds up wealth, you're able to use that cash as a line of credit to yourself to then use for any of life's needs, whether it's, in our case, paying off our student loan debt or other things we might want to do with our money, like going on a vacation or investing in real estate. And then we are the ones that control the repayment of that loan to ourselves, to our policy that we own, to a company that we're in essence owners of, a mutual life insurance company. And so we would essentially buy back the debt from Sallie Mae and the government or anywhere else our debt was at the time, and control the environment where that banking was happening. So that was sort of the tool he introduced us to.
Well, talk to us about how it has affected you psychologically and emotionally.
Yeah, thank you. That's a great question. I think sanity is the word that kept coming up in that conversation with him, and that's been true for my wife and I. As a result of setting up these several accounts now, several policies, and then using them to pay off all of our student loan debt, and then using them to pay for all of our other life's needs, our cars, our down payment for our house, our real estate investing, and one day our future college for our daughter. It just provides a sense of security, peace, and I guess an overwhelming sense of sanity that we're not having to chase the Wall Street game, and we're not having to hope and pray that our deals will work out. How many real estate deals have we all been in that didn't work out? These policies have an outcome which is determined before we even begin, because they grow on a guaranteed basis. They have a tax-free nature to the access of the cash, like a Roth IRA. They're liquid money, so I can get the money in an emergency. In the midst of this corona pandemic, Alan, it has been such a relief to my wife and also to me to know that we have several years of cash set aside for expenses, just in case we need it for any reason. We didn't have to beg the government for a PPP loan. We didn't have to beg, a bank for an EIDL loan. We didn't have to worry about whether we could cover expenses or payroll this month. This is not to say anything about my wife and I. We're not that smart. We couldn't have anticipated a global pandemic. But on a psychological level, where you put your money makes it do different things, and it makes your heart feel a different way. I'll tell you a quick story. There's actually a biological, psychological term in the medical community. It's recently reported in JAMA, the Journal of American Medical Association, recently coined the phrase wealth shock. And they've actually had a correlation, maybe a causation, between the stock market dropping by only 10% and a 3x increase in heart attacks. And that is a tremendous correlation, if not causation, and they track it over many years. So I don't know if that answers your question, but I would much prefer, for my own personal emotional sanity, to not have to work an extra 37% of my day just to pay the bankers. I'd rather, work 20 hours a week rather than 40, or 40 rather than 60, right? I'd rather not have to worry about how I'm going to cover the bills this month. So I guess what I'm trying to say is, where you choose to keep your money will make your life oriented toward a different outcome, if that makes sense.
Yeah. So you had a major fork in the road here. You said you did not study finance in college. And I suspect this conversation you had with your professor mentor had something to do with that fork in the road. Tell us a little bit about that decision to actually go into financial planning when it really wasn't what you studied for.
No. My wife and I did see money as something important enough for us to ignore for several years after we got out of college. I'll say it that way. I did end up working for a CPA that originally got me very interested in the big world of finance. And of course, our own monthly student loans were a regular occasion for me to have to pay attention to my own personal financial plan. But it wasn't until I remember looking at applying for a regular teller job at a bank not long after graduating, just to pay the bills, and really just asking, why am I doing any of this? It felt very soulless, I guess is one way to put it. But when we found a tool and a mindset that actually changed our life, it was an aha moment enough that we said, this is good enough to share with others. And if it takes the pressure and the insanity off of our financial life, what more could it do for these many other families, individuals, and business owners and real estate investors that we could meet? And so it was sort of like, hey, we found this great gift. Let's figure out how many people we can share it with. And that has been a fork in the road kind of conversation. I think all of us have had a few of those over our lifetime, with good friends, good people that you trust. And hopefully they've been positive choices. Hopefully you chose the Robert Frost path, as it were, over your lifetime. But for my wife and I, I'm glad to report we were courageous enough or foolish enough to try something out of this world, kind of off the averages, using whole life of all things to pack away cash and pay off a debt. It's not average, that's for sure. But I don't want to be average, if average means being in debt up to my eyeballs and riding the roller coaster of Wall Street.
Well, Mark, a fascinating story. Before we go here, could you tell our viewers and listeners how to connect with you?
Sure, of course. Thank you. If folks want to dive deeper into this strategy or other strategies, we have a weekly podcast called Not Your Average Financial Podcast, where we have over 100 episodes on these and other equally off the wall but time-tested financial strategies that have helped Americans across the country for generations. So that's Not Your Average Financial Podcast. And if folks want to connect with us, you can find us at growmorewealth.com. That's growmorewealth.com.
Thank you for joining us on Creekside Chats with Successful Real Estate Investors, brought to you by Steed Talker Capital. For more information, as well as access to our free ebook on enhancing your well-being through real estate investing, be sure to connect with us at steedtalker.com. As part of our efforts to make the world a better place, Steed Talker Capital contributes to activities and organizations committed to better understand the equine and enhance the humane treatment of horses worldwide. Steed Talker Capital, working for a world where all creatures, great and small, flourish abundantly. Connect with us at steedtalker.com.